Welcome everyone. If today is your first time on the channel, we're talking about business, personal finance, investing, and success. Today's video is on 4 ways to invest in real estate. If you're not already invested in real estate or you're looking for another way to invest in real estate, the first way to start investing in real estate is to buy your primary residence. So your primary residence is the home that you live in, your family lives in, and a primary residence is a great investment in real estate because if we look at the track record of real estate in the US and around the world, it has gone up and up and up with inflation and above and beyond inflation. If you look at some of the best investments of your parents and of your grandparents, it was their primary residence. It went from 20,000 to 100,000, or from 20,000 to 300,000 within the last 50 years, maybe 50 to 100 years. So a primary residence is a great first investment into real estate. If you don't already have one, plan out how you can start to make progress to buy your first home. The second way to invest in real estate is going to be to buy an investment property. So it can be a single family home, it can be a townhome, it can be a duplex, it can even be a condo or an apartment where you can rent it out for as much as you paid for it, or rent it out for slightly more than you paid for it, because then you can basically cash flow that investment. And what cash flow means is that, let's say the monthly payment on your townhome or your condo is $1,000, and you can turn around and rent that out for $1,000. So basically you're playing the bank on the transaction. So the people rent it from you for $1,000 and you pay the bank $1,000. But in the long run, you get to keep the real estate equity, the appreciation of that townhome or that condo. So let's say the appreciation, in 1 year is $20,000, then you get to keep that $20,000 when you go to sell the investment. Or in 2 years, it goes up $40,000. You get to keep that $40,000 if you go to sell your real estate investment. So that's number 2. Number 3, the third way to invest in real estate is a little different. Maybe you've heard of it, maybe you haven't. It's actually to invest in a mobile home and then to do a seller finance option or a lease to own option on that mobile home investment. And if it's new to you, I did a video maybe 2 months ago on this. I actually did it twice, and my dad has actually done it once, and then a few other people that I know have bought mobile homes. So you buy it for a really low price, so let's say $4,000 or $5,000, and then you put a little bit of time, a little sweat equity fixing it up, making it a little bit nicer, fixing up some of the carpets, paints, kitchen, all that kind of stuff. And then you can turn around and do a seller finance or a lease to own option on your mobile home for like $20,000. So you can make $15,000, $20,000 doing a seller finance on a mobile home. But go find that other video if you're curious and what I did and how I did it, and leave any comments or questions below about it. And if you're finding any value in the video, go ahead and hit the like button, hit subscribe, and thanks so much for watching these videos. The fourth way to invest in real estate is through an REIT, so also known as REITs. So they're real estate investment trusts is what they are. And then these are traded on the stock exchanges. You can find a stock that actually has a bunch of these in them, or an ETF that has a bunch of basically real estate investments in the ETF. And basically what happens in that investment is you'll get dividend payouts maybe every quarter, maybe every month. They all can pay different in different time frames. So you can go do your own research and your own homework if you're interested in something like that. But you can buy a real estate investment trust on the stock market and then hold on to that and get dividend payments. And also, as equity appreciation goes up in value, you also get to keep that part of the investment as well. I guess a little more explanation on what a REIT investment trust is, and a real estate investment trust is they're a company that goes out and let's say they have $1 billion, so they buy $1 billion worth of buildings, but they use funds from a lot of different people, from 1,000 people. So you might be a part of that group of people, a group of that 1,000 people that put their money in the investment trust that they go out and buy the real estate with. So they're kind of like the manager for you. So of course they get a little bit of profit, but that's kind of how it works. And then you get some of the profit, the dividend payouts, and then some of the appreciation of the REIT, real estate investment trust. And then once again, if you're getting any value out of the video, hit subscribe, hit like. Thanks so much for watching, and leave any comments below. We'll see you in the next video.